Welcome back to Dinar Info News, your trusted source for the latest and most accurate updates surrounding the Iraqi dinar, global currency markets, and financial movements that matter. If you're following the fascinating developments in Iraq's economic resurgence, today's update is something you absolutely cannot afford to miss. Grab your notes, because what we're about to explore is not only historic but potentially transformative for Iraq and the wider Middle East. We're diving deep into Iraq's big move, the Dinar Reenters, the Forex market, and the big question is, are you ready? After years of speculation, partial implementations, denials, and behind-the-scenes maneuvering, the Iraqi dinar is finally making a legitimate re-entry into the foreign exchange Forex market. For years, investors, economists, and everyday citizens both in Iraq and abroad have speculated about when, or even if, this would ever happen. Today, that speculation is turning into action. The Central Bank of Iraq, in coordination with international financial institutions, has made strategic moves to reintegrate the Iraqi dinar into the global trading system. This marks a pivotal shift in Iraq's monetary policy, one with far-reaching consequences that go beyond borders and deep into economic alliances, trade potential, and political influence. Let's take a moment to understand how we got here. The dinar's journey has been one of incredible highs and devastating lows. Decades ago, the Iraqi dinar was a strong and respected currency in the Middle East. Back in the 1970s and 1980s, it traded at a much higher rate compared to the US dollar, due in part to Iraq's massive oil wealth and relatively stable governance. However, after the Gulf War, UN sanctions, the 2003 US-led invasion, and years of political turmoil, the dinar's value plummeted, and it became isolated from mainstream currency markets. It was effectively depegged, restricted, and managed. In a tight, highly controlled environment, only black market transactions and internal use gave it any form of liquidity outside official government channels. This led to the emergence of two parallel economies in Iraq: the official exchange rate managed by the central bank, and the real street value determined by supply and demand in local markets. Fast forward to recent years, and Iraq has been trying to clean up its fiscal and monetary image. From improving its relationship with the International Monetary Fund (IMF) and World Bank, to reforming its banking sector and stabilizing oil revenues, Iraq has laid much of the groundwork needed for this big move. For a while now, signs were building up increased transparency in central bank operations, implementation of electronic banking systems, anti-corruption measures, and bilateral agreements with major trading partners. All of these were strong signals pointing toward a broader goal of reintroducing the dinar into global circulation. The recent announcement by the Central Bank of Iraq that it would allow real-time FX trading of the dinar on international platforms is the culmination of those years of reform. This re-entry into the Forex market is not symbolic, it's functional. Iraq is working with global trading platforms and partners to allow the dinar to float within an adjusted, managed regime. This means market forces will begin to play a greater role in determining the value of the dinar. While Iraq will not immediately adopt a fully free-floating currency model, what we're seeing is a managed float system, similar to what many developing economies use to maintain a balance between market freedom and monetary stability. The central bank will still intervene to prevent excessive volatility, but the currency will now have access to much broader global exposure. So what does this mean for investors? Well, this is where things get interesting. There are already ripple effects happening in various corners of the investment world. Forex traders who've been following the dinar story are now getting more than rumors. They're getting actual tradable access to the currency. Institutional investors are taking a second look at Iraqi government bonds, and multinational corporations operating in Iraq are beginning to reevaluate their hedging strategies. It's also drawing attention from speculative retail investors, many of whom have been holding dinar notes for years, waiting for an opportunity like this. This influx of demand could potentially boost liquidity, and more importantly, credibility in the eyes of financial institutions. But we should also proceed with caution. While this re-entry is promising, Iraq still faces significant hurdles. There are still concerns about political stability, ongoing issues with corruption, and questions about how independent the central bank truly is from political influence. The Forex market is unforgiving, and for the dinar to succeed long-term, Iraq will need to show consistency in its economic policy, fiscal discipline, and international cooperation. That said, the timing of this move couldn't be more strategic. Iraq is benefiting from relatively strong oil revenues, a slowly improving infrastructure, and a renewed interest from countries like China, the UAE, and even the United States, in building economic bridges rather than military ones. These partnerships can provide a cushion as Iraq navigates the rocky waters of global currency trading. At Dinar Info News, we've been covering these developments with a critical eye. We've reported on every speech from the central bank governor, analyzed every leaked policy document, and tracked international meetings related to Iraq's financial recovery. So let's now dive into what the average investor or citizen should consider. If you are someone who's already holding dinar, either in physical notes or through an investment platform, you need to stay alert. The reintroduction of the dinar to Forex markets could mean greater volatility in the short term, but massive upside potential in the long term. If the transition is successful, the re-entry could also impact the dual exchange rate system that's existed in Iraq for years. For a long time, Iraq maintained an official rate set by the central bank and a secondary market rate, often used in real-world transactions. This discrepancy has created inefficiencies, fostered corruption, and confused investors. By allowing dinar to be traded on international platforms, Iraq may be signaling the beginning of the end of this duality. A more transparent and unified exchange rate is essential for attracting foreign direct investment, FDI boosting trade, and improving government revenue management. A unified rate also means that remittances, aid, and international business contracts can be more reliably priced and executed. Let's also not forget the regional implications. Iraq is a heavyweight in the Arab world, not just because of its oil reserves, but also due to its strategic geographic location and cultural significance. A more stable and globally integrated dinar can influence neighboring economies, from Jordan to Turkey to the Gulf states. It also allows Iraq to better participate in economic blocs and trade agreements. Recent conversations between Iraqi officials and representatives from the Gulf Cooperation Council (GCC) suggest that Iraq is positioning itself for a more influential role in the Middle East's financial future. With regional players already exploring digital currencies and cross-border payment systems, Iraq's move toward Forex reintegration may also be a precursor to a broader monetary modernization. And what about the Iraqi people? Perhaps the most significant impact will be on everyday citizens who've long dealt with inflation, fluctuating prices, and unstable purchasing power. A more stable and respected dinar could improve confidence in local banking systems, increase access to credit, and reduce reliance on the US dollar. We may also see more Iraqis open foreign currency accounts, invest abroad, or participate in international trade. All of this could build a stronger middle class, create jobs, and improve overall economic resilience. That's the human side of this story, and it's just as important as the financial data. Still, there are skeptics, and rightly so. Many wonder whether Iraq is truly ready for the pressure that comes with Forex trading. Will speculators try to manipulate the currency? Will internal political factions try to sabotage reforms for short-term gain? Will the central bank be forced to burn through its foreign reserves to defend the dinar in a volatile environment? These are real concerns, but according to recent statements from both Iraqi officials and IMF representatives, safeguards are being put in place. Iraq's foreign currency reserves are at one of their highest levels in history, reportedly topping $100 billion, giving the central bank significant firepower to manage volatility in the near term. Additionally, Iraq is investing in digital infrastructure to support this transition. Real-time settlement systems, KYC compliance protocols, and blockchain-based monitoring tools are being deployed to ensure smoother currency flows and reduce the risks of capital flight or money laundering. These modernizations, while still in their infancy, point to a larger transformation in how Iraq approaches monetary governance. Let's not overlook the symbolism of this move either. Iraq rejoining the Forex market is more than just a financial event, it's a national milestone. It's a signal to the world that Iraq is ready to shed its image of war, instability, and dysfunction, and embrace a future rooted in growth, cooperation, and innovation. It's an invitation to the world's investors. Take another look. Whether you're a Forex trader in London, an oil executive in Dubai, or a young entrepreneur in Baghdad, the message is clear. Iraq is open for business, and the dinar is no longer sitting on the sidelines.